Hey, friend, welcome back. As always, I'm your host, Brian Davis, co-founder of Spark Rental, and I'm on this journey with you. Quite literally, every month, I am investing my personal money in every deal that we review together as our co-investing club. And today, we are taking a deeper dive into how to start raising capital to buy bigger properties if you are an active real estate investor. If you're out there buying, 3, 4, 5, 6, 10 unit properties and you want to start buying 20, 50, 100 unit properties, how do you raise capital to do it? How do you make that leap? How do you get started with that? So we brought in Litan Yahav from Viser. Litan, tell us what we need to know.
Right. So thanks for having me. So I've been an LP investor for 9 years. I haven't been much of an active investor, but I have a lot of active investor friends. And there's a point where these active investors sort of reach a level of expertise that they want to take it to the next level and scale up and buy bigger properties, bigger deals. And for that, they usually need more than their own capital in the bank and bank's money. And that's when they start asking, people like me and other friends or other LP investors, hey, listen, I want to do a deal like this, a multifamily complex like that, and I need to raise some money. And I think as an LP investor, that is super interesting. Like I love investing with people who are at that point where they've been, flipping houses, renting, managing rentals on their own for like many years. And now they want to take it to the next level because they have all this expertise of like getting the job done, getting the footwork in. And so like when they want to go and scale up, they have that expertise. Now, another thing I think is really interesting, many people think as an active investor, it's so hard to raise capital. Like I'm competing with the big guys, but I think the smaller guys, the smaller active investors, they'll go after the smaller deals that have more meat on the bone because the bigger operators, the bigger sponsors, the bigger GPs are usually looking for bigger deals because they need to raise more capital. And so there needs to be a lot of meat on the bone. So they're leaving the smaller deals on the table for more active investors to go and take on. And so I think it's a super interesting market to look into. I think when they raise capital from LPs, usually really good terms for the LPs because these guys are getting started. These guys and girls are getting started in their, GP journey of raising capital. And so there's a lot of like money to be made in a really good partnership. And the second is like you're building the foundations of investors who continue with you as you continue to grow. And you'll compromise maybe on the returns at the beginning because you're used to doing, flipping one home at a time or managing one rental property at a time. But when you can raise capital, you're leveraging other people's money to make a lot more money, and you're risking more time but less of your own money, and essentially making an infinite profit on that time. So I think it's super interesting to think and talk about active investors who are segueing into being GPs and raising capital from LPs.
Yeah, that's something that we've seen in our co-investing club is that there is plenty of opportunity at the lower end of the spectrum with real estate syndications. Like you said, they're not competing with the giant, corporate, if you will, sponsors and syndicators. And, over the last couple of years, we've actually seen some better performance among some of the smaller syndicators, just anecdotally, than the really big names in the industry that have built this huge brand around themselves and sell, masterminds and coaching and all these programs and stuff. Their eye was really taken off the ball because they were not focused on their actual real estate investments so much as they were building a brand. So we've actually seen so much better results with the smaller syndicators in our co-investing club. So Litan, I love that. In 30 seconds or less, how do you help people? How does Viser.co help people? And how can listeners connect with you?
Yeah, right. So Viser, Vyzer.co is a platform and software we built to help passive investors keep their investments passive for LPs and GPs like me. I'm totally available for anyone to reach out. My email is Litan, Litan at Vyzer.co, social media, the likes of it. And I appreciate you having me on.
Thank you, Litan, for coming on and joining us today. And guys, if you enjoy these conversations, please rate, review the show. It means a world of difference to us, and we will catch you on the flip side.
Like the idea of diversifying into real estate, but don't want the headaches of being a landlord? Enter passive real estate syndications. You buy fractional ownership in apartment complexes and other large-scale properties. Earn your share of rental income and your share of the profits when the property sells. In fact, most of the syndicators we've invested with have averaged returns over 20% per year. You even get full tax benefits, including accelerated depreciation. Even as you collect distributions in real life, you often report a loss on your tax return. So why doesn't everyone invest in real estate syndications? First, you typically need to know the syndicator to invest, and the minimum investment for each property is high, usually $50,000 to $100,000. That's a lot of money for a single investment, which is precisely why we formed an investment club to pool funds and invest together. Every month, we propose a new deal in the co-investing club and vet it together on a group call with the syndicator. Each deal is purely optional. Pass or invest as you like. As for us, we invest our personal money alongside you in every single deal. If you want to invest like the 1% without actually being a 1%er, join Spark Rental's Co-Investing Club. Email us at support@sparkrental.com with questions, and we look forward to investing alongside you.